What's happening, investors? Welcome back to another video. This video is for entertainment purposes only, and we're speaking about Senseonics Holdings, ticker symbol SENS. There is a date that you should sell this stock by. Yes, I have found in my research, I found a particular time that I think this stock will fall, and I'm going to explain why. I know it's an interesting claim, and of course I'm not a financial advisor. This isn't financial advice, so I'm probably wrong, but what I found was quite interesting, and I think you'd like to hear about it, so please stick around to the end. But before I get into the video and explain what I found, could I ask that you just invest in the like button, add the subscribe button to your portfolio, and turn on notifications. I try to make the best videos possible on stocks. I want this channel to be the best investing channel on YouTube, and I can only do that by getting you guys to hit the like button and subscribe. And I'm gonna put out the most honest content, the best research I possibly can. I'm not afraid to say a company's bad. I can come out and say that. I know a lot of other channels wouldn't say that because they're scared of the dislikes. I'm not scared of dislikes. The only thing I'm scared of is not being successful, and by not being successful, it means not being the best investing YouTube channel on this platform. So please hit the like button and subscribe, and let's get straight into the video. The stock did have a nice green day. SENS Stock was up 5% off no particular news. I think a lot of the meme stocks and a lot of stocks are finally starting to go back up now that crypto is going down, and this is something that I predicted a few weeks ago was going to happen. And it's nice to see SENS get a nice green day. I know investors have seen a lot of red recently, so it's obviously a good thing. What I want to bring to your attention is this, however. I was re-listening to the conference call, and I was looking at their 10Q again, their last earnings, so their Q1 earnings. I know this was a little while ago. However, I was re-listening to it, re-watching, taking some notes, and I found something that I missed. I found something that is going to be, I've just put a few things together, and just from what I've seen in the stock market, I think it is going to affect the price of this stock. The first thing is, let's just look at the balance sheet. We can see that they are in a very good cash position right now with $178 million, and their total current assets are $191 million compared to total current liabilities of $15 million. So straight off the bat, this company is not going bankrupt. They have the money to keep going. They've got more current assets compared to current liabilities. And if you know my videos, you know this is something that I always look at. I want to make sure this company can pay off their debts, and they definitely can. It is a big tick. Here's where things start getting interesting. So the first thing I want to notice is we saw total revenues from Q1 of 2020 to Q1 of 2021 increase dramatically. In Q1 of 2020, they were only 36,000, whereas in Q1 of 2021, that number became $2.8 million. And this was with the Rona. I know a lot of stocks and companies say that the Rona affected them, but it didn't really. They were fine. They still saw growth in numbers. However, in this case, being a company that is involved in diabetes, which means medical and that kind of thing, it did affect them because they had 1 year with no sales reps. They weren't taking any sales reps out, and they just focused on their existing account. So for the past year, they weren't focusing on creating new customers, okay? They were just focusing on growing their existing accounts, and in doing so, they were able to grow revenues substantially. Another thing I want to show you is this. Their sales and marketing expenses went from 11 million to 1.6 million. The reason why this decreased so much is because they have a company doing the marketing and sales, being Essentia. So Essentia is taking care of the marketing and sales, the distribution, and the commercialization. And this company is a major player in the diabetes space. And of course, we know SENS is in that category. So being together, working together is extremely beneficial for both the companies. And because of that, we were able to see their sales and marketing expenses decrease. And of course, because of the Rona and not having sales reps also. Another thing I want to show you is this right here, the share dilution. And this is a bad thing. We know that we've spoken about this in my other videos in regards to companies diluting shares. If you don't know what it It's basically them adding more shares into the market, which then doesn't dilute the number of shares you have. So if you had 10 shares, you still got 10 shares. However, it dilutes the percentage of the company that those shares are worth, which means you're getting a smaller piece of the pie as they add more shares. A really good company, a nice value stock, a big company, you would actually see them buying back shares. However, a company that's growing and needs revenues to grow, you will see them diluting shares, and in extreme cases, they'll be diluting by momentous amounts, by massive, and in extreme cases, you'll be seeing them diluting by massive amounts. I'm okay with dilution to an extent. However, if it's way too much, I really don't like investing in those companies because there's no say as to when they're going to stop. You see, in Q1 of 2020, they had 203.7 million shares. However, in Q1 of 2021, they had 364.2 million shares. So obviously, they have increased by a substantial amount. In fact, it's nearly double, which is worrying. However, if they do use this money to good, and we did see that nice increase in the cash position, they would use this money to expand. Because as we know, SENS is currently in the process of getting their 180-day system approved by the FDA, and they expect really big sales from this. So they need the money to ramp up production and to keep up with the expected demand, because once this is out there on the market, there is going to be nothing like it in the world, and it is going to give SENS a huge competitive advantage. And they're also working on the 365-day system, which is going to be even bigger. So obviously they need this money, and they're getting this money by diluting shares. Okay, now that's what's going on here. As I said, it is bad because it is decreasing the percentage of the company you own. However, it is good because they're raising money to grow the company. So hopefully they can grow it more compared to the percentage that you get decreased, and you still benefit from this. And one day, if this company is successful and grows into a big value stock kind of company, you might see them buying back those shares, which is going to be an extremely beneficial thing for you as an investor. In the first quarter, we mentioned that Ascensia got involved, and now they're taking care of the marketing. So in the first quarter, what they basically did was they familiarized Ascensia with the product, with their existing customers, all that kind of thing, and they built a nice marketing strategy. They're aiming to raise awareness for customers. So they're doing direct to customer marketing. And the reason for this is because these products, a lot of the time, the actual customer will request it. This is what they want to, this is the treatment they want to go down. And if the customer doesn't know about it, then it's not going to be beneficial for the company, because obviously they're not going to ask for it. So it's not just about selling this to doctors to recommend to their patients. They also want to make the patients aware that this is something that exists, and that's going to be their marketing plan going forward. Now, here's the key events, here's the dates, and this is why I think if you want to swing trade this company, this is when you should sell the stock by. The first thing is 2 key diabetes conferences in June of this year. I think this is going to be a positive catalyst for the stock, because they are going to give results on their 180-day trial, and these are the same results that they've put in their FDA application. Obviously, they're good results. They wouldn't be presenting results that were submitted into an FDA application if they were negative. They wouldn't have even bothered going through the process of getting FDA approved if the results that they're getting approved on weren't positive. So I'm expecting these 2 conferences in June to be very, very positive catalyst for this stock. Another thing, okay, this is the long-term play. This is just my logic here. FDA, they started in mid-April, and it typically takes 180 days to get FDA approved if all goes well. Now, they do suspect that there could be some delay due to the Rona, because they're saying the people that are approving them in the FDA might have a lot of backlog to take care of. But if there isn't a delay, we can expect FDA approval for the 180-day systems by mid-October, which is 180 days from when they started the process in mid-April. Here's why I think you'd want to sell before this happens. I suspect that there will be a lot of people buying into this company because it is spoken about. It's a widely known company in the stock market community. And because YouTubers, investors, it's on subreddits, on Wall Street Bets, are speaking about this company and looking at this as a potential catalyst, I suspect a lot of people will be buying in before this happens just to sell the news. Whether they get FDA approved or not, I think the stock might fall on the announcement of this because people are going to be in this company for this and take out their money and maybe buy back in again when they're in the process of getting their 365-day systems FDA approved. Of course, as a long-term investor, don't even worry about this. Just buy your shares, hold them, because you're not worried about now. You're thinking about 5-10 years down the track, and this is just going to be a little bump in the road. You don't care if it goes up or down, as long as it ends up down there, which I think it might, because this company is a leader. They've got a nice little moat around them, being so competitive and so advanced in their technology, being the only system. They've got a lot of catalysts in their pipeline. It's a really positive story what they're trying to do here. It's a nice thing. If you know anyone with diabetes and you know they have to constantly stick themselves with needles to get results and all that stuff, whereas with this they have 24-hour tracking, and it's not necessary to constantly jab yourself and do those things. So it is a fantastic product. It's a good company. I really believe in the management team. I was very impressed with them in the conference call. However, if you're looking at a swing trade, I do think that this stock might fall on the announcement of the FDA approval. And if it's not FDA approved, then we'll definitely see a fall. That's why I think if you're swing trading, maybe consider getting out just before then and locking in some profits. But of course, I'm not a financial advisor, and this is not financial advice. I'm just saying what I think. And the reason why I'm saying this is because I've seen many times a big catalyst. People will be looking forward to some big catalyst in a company, and when that happens, you just see the stock plummet. We saw it on Tesla with Battery Day. Although they had good news, the stock still fell down. We saw it with the CCIV and Lucid Motors merger. Everyone was waiting for this merger to get approved, to get confirmed rather. As soon as it got confirmed, what happened? The stock tanked. Workhorse and the USPS contract, and this is the risk. If the good news doesn't happen, the stock tanked. So that's why my take, if you want to swing trade this company, I'd consider maybe getting out of there just before this approval and locking in some profits. But of course, I'm going to say it again, I'm not a financial advisor. This is not financial advice. Please always do your own research before investing and argue with me. Let me know in the comments. Tell me why you think I'm wrong. I want to get both sides of the argument here, because this channel is going to be the best investing channel on YouTube, and to do so, I think a bit of healthy discussion is going to be very, very beneficial, and I'll be happy to make up a follow-up video going over some of the good points that you guys made. So let me know in the comments. Please smash the like button, add the subscribe button to your portfolio, turn on notifications, all that good stuff, and I will see you all in the next video. Also, one more thing. If you like these medical stocks, I made a video about BNGO stock. I'll leave it at the end of this one. Check it out.